Hello dear learners, how are you all? Hope all are fit and fine. Today I am here in front of you with class 12th accountancy NCERT textbook part 1 with chapter basic concept of partnership. In this we will discuss the topics first definition of partnership, features of partnership and partnership deed. After this session you will be able to answer the meaning of partnership, you will be able to define the concept of partnership, you will be able to explain the features of partnership. Fourth, you will be able to list out the content of partnership deed. Dear learners, you all know that in class 11th we have studied chapter 2nd forms of business organization. From that I would like to ask you one question. Which is the first and oldest form of business organization? Come on learners, hurry up, give me answer. Yes, very good, correct answer, clap for yourself. So, the first form of business organization that you have studied is sole proprietorship business or single ownership business. In sole proprietorship business, only one person used to run the entire business. Profit and loss belongs to single owner or proprietor. But as you all know that the necessity is the mother of invention. Due to some limitations of the sole proprietorship business, the new form of organization emerged, which is known as partnership firm. So, let us first understand the definition of partnership. Section 4, again I am telling you, section 4 of Indian Partnership Act 1932 defines partnership as the relationship between two or more persons who have agreed to share the profits of the business carried on by all or any one of them acting for all. So, in the partnership there are two or more persons who comes together to join their hands and agrees to certain provisions for the sharing of the profit of the firm. Do remember, partners have to come together to share the profit of the firm, but sometime in business activity there may be loss. Then in such situation they are supposed to bear the loss in profit sharing ratio. Now, let us discuss some basic features of the partnership. First, there are two or more persons. Do remember, dear learners, to start a partnership business minimum 2 or more persons are required. Section 464 of the Companies Act 2013 have empowered the central government to prescribe the maximum number of partners in the firm, but at the same time number of partners cannot exceed more than 100. Hence, the central government has prescribed the maximum number of partners in a firm to be 50. Do remember, minimum number of partners will be 2 and maximum number of partners will be 50. Second features, partnership is the relationship between two or more persons who comes together to share the profit of the firm. It is not necessary that such agreement is in written form. An oral agreement is equally valid, but in order to avoid disputes, it is preferable to have partnership agreement in written form. Third, existence of business and profit motive. Partnership agreement must carry some business. It means simply purchasing together any assets that does not form a partnership. If partners are in a business and they purchase for the business to earn the profit, makes them partner, and that is the partnership. Fourth, sharing of profits. Another aspect of the partnership is the agreement of sharing the profit or loss of the business. Though the definition contains that Partnership Act describes a partnership as a relationship between two or more persons who agreed to share the profits of the business, sometime business activity may result into loss. Such loss is to be shared in the profit sharing ratio. sharing of loss is implied. Fifth, partners are mutual agents to each other. Dear learners, in this feature, partners are mutual agent to each other, means that when any partner does any types of deal or contract with any other firm and signs the deal, then automatically rest of the partners are also included in that deals or contract, because partnership firm is run by all or any one of them acting for the all. As a result, partners are considered mutual agent to each other. Sixth, liability. Under the partnership agreement, each partner is jointly liable to all the partners, also to the third parties. All the partners are liable. Dear learners, kindly note that liability of the partners in the firm is unlimited except minor partner. It means that in the event of loss, when the firm is not in a position to clear the debts of the firm, in such situation private assets of the partners are also sold off for paying the firm's debts. Dear learner, let us have quick recap through main highlights. So, first, section 4 of the Partnership Act 1932 is important. Second, there may be minimum 2 partners and maximum 50 partners. Third, partnership agreement may be oral or written. Fourth, partners are mutual agents to each other. Fifth, partners can own assets and utilize them in the name of the firm for profit sharing. Partners have unlimited liability. Another topic that we will discuss is the partnership deed. It is very important from the viewpoint of examination. So, watch the video very carefully. Let us understand the partnership deed. Partnership deed. Partnership is the result of agreement among the partners. It is not compulsory that the partners agreement must be in written. Partnership agreement may be in written or in oral form. Wherever agreement is in written and contains the terms and conditions of the agreement, it is called partnership deed. Further, dear learners, do remember that in order to avoid future disputes among the partners, it is always advisable to have the agreement in written form. Now, let us see contents of the partnership deed. Contents of the partnership deed are: first, name and addresses of the firm and its main business. Number 2, name and addresses of all the partners. Number 3, amount of capital to be contributed by each partner. Number 4, the accounting period of the firm. Number 5, the date of commencement of the business. Number 6, rules regarding operation of the bank accounts. Number 7, profit and loss sharing ratio. Number 8, rate of interest on capitals, loans, drawings, etc. Number 9, the rights, duties and liabilities of each partner. Number 10, treatment of loss arising out of insolvency of the firm. Number 11, settlement of the accounts on dissolution of the firm. Number 12, methods of settlement of disputes among the partners. Number 13, rules to be followed in case of admission, retirement and death of the partner, and any other matters relating to the conduct of the business. So, let us have a quick revision on the partnership deed and some contents on the partnership deed. So, revision points are: number 1, partnership is a written agreement and written agreement is called partnership deed. Number 2, to avoid the disputes, agreement is advisable to have in written form. Number 3, names and addresses of the firm and its main business is important. Number 4, amount of capital to be contributed by each partner is also important. Number 5, accounting period of the firm. Number 6, date of commencement of the business. Number 7, rules regarding operations of bank accounts. Number 8, profit and loss sharing ratio. Dear learners, after quick revision, here I am giving you assignment questions. Question number 1, define partnership. Question number 2, under which act partnership firm is established. Question number 3, what are minimum and maximum numbers of partners in a partnership firm. Number 4, to avoid future disputes among the partners, should maintain agreement in oral or written. Dear learners, in next video we will discuss about the profit and loss appropriation account, capital accounts of the partners. Meanwhile, keep learning. Thank you.